Hello everybody, it's me the Boss Hog, and today we're going to look at my portfolio as of the week ending the 18th of Feb, my buys, my sells, my dividends, and what a fun week it was, so let's do it. Alright, so we're doing earphones this week in part because of my daughter and also in part because it's super duper windy here in the UK at the moment, so it's very noticeable from outside, so hopefully this is a little bit cleaner. I mean, it was a really erratic week. You can see here it's pretty red. It was definitely challenging, heavily influenced by sentiment in Ukraine at the moment, as well as sort of, the continued weakness, I would say, of the S&P 500, which is massively outperforming the underperforming the FTSE 350 year to date. You can see here some of these movements. I'll whiz through them, but National Express, I was expecting this. I felt like it ran up a little bit last week. So I was kind of expecting this and it didn't disappoint. This is pretty much what I was expecting. I would say I was able to realize some sells from this, as we'll get to in just a second. But yeah, minus 8% on my largest holding is going to have an impact. EVR here minus 36%. At least this was part caused by the fact that they divested their coal business. So that definitely had an impact. But again, impacted by geopolitics at the moment. GENI as part of the wider tech and growth sell-off. This is my, I think, third largest stock. So that's going to have an impact. At least we saw some green with AMKR. I was actually on their earnings call. I was really impressed with their earnings call, and you'll see very shortly that caused me to make a move and really was the reason for my title of this video. Polymetal, although it is going to be impacted by geopolitics as well, certainly it's got many mines in Russia, it also saw some favourable sentiment just because gold hit the highest level it has for many years, so that's going to have an impact there. Phoenix, this is an insurance company. I'm not really sure for the -4, outside of the factor that where they've been acquiring businesses over the last few years, they've had like major shareholders as part of that business dealing. Previously, it was Swiss Re, who now have sold out entirely. This -4% at least was partly influenced by the fact that Aberdeen, or whatever they're calling themselves these days, Standard Life, Aberdeen, they sold 1/3 of their stake, so they had just under 15%. They sold it down to about 10%. So again, I expect in due course Aberdeen to exit their position, and once that's done, then Phoenix will no longer have any of these things to work through. So I'm actually considering adding to Phoenix, actually, just because I think it has some upside and it's going a little bit unnoticed considering it's a fairly large now FTSE 100 company. Salesforce, tech-led as far as I can tell. Games Workshop, FTSE 250 sentiment as far as I can tell. FEVR here might be more of the sentiment around sort of growth stocks. It might still be off the back of what was seen as very disappointing earnings. I actually thought the earnings were, a little bit disappointing because of the costs, but I've spoken about this beforehand. And, their revenue and the reason for me holding these FEVR shares was all really good. So actually, I'm not concerned about this at all. S4 here, this is basically a marketing company led by a bit of a legend. This is going to be quite volatile, but again, it was impacted by sort of the, sentiment and growth as far as I can tell. And Goldman Sachs, likewise, -5% as well. So pretty wild all around. I don't think I have anything else to add beyond that. I did add a little bit extra capital this week. Originally, I was planning on doing 250, but on Friday, I decided to add a couple of hundred extra just to sort of take advantage of, again, wider market pressure at the moment and average into it. I didn't add anything last week just to give me a little bit of firepower. I don't have a ton of available capital to add until the end of March, but, we're aiming to do sort of 200 to 400 a week on average, something like that, which is about half of my levels from last year when we had some cash reserves to get through as well. So that's part of the reduction. Super heavy trading week. I think in terms of actual values, this is my highest ever trading week and my second highest by percentages, but definitely I made some very significant moves this week, as we'll see. And again, that's alluded to in the thumbnail. And last but not least, some dividends this week, including my first from Realty Income since I reopened the position. So that's 20 shares worth. Nothing super major though, to be honest with you. And Hasbro here, as you'll see very shortly, I won't be getting any further dividends from because I decided to sell out of that. So that tease aside, let's see what I've been buying this week because there's lots to talk about here as well. All right, so a lot of this is green, I appreciate, but you'll see in a second that many of these are grouped together. But I want to start with AMKR. I went onto their earnings call and honestly, I was super duper impressed. This is a semiconductor stock trading on a PE of 9. Before the earnings, it was closer to 8. even afterwards, it was kind of pulled back, I guess, by the wider market sentiment. It did go up to like 24.5, but then got pulled back almost immediately. I think actually might have even touched 25 very briefly. I was also really pleased with myself here because I went onto the earnings call kind of with numbers in my mind, right? And this has been growing as a position for me. And really the reason why I like AMKR is because I believe it's sort of reached scale. It's about to start significantly increasing its margins and its earnings, and it's about to start appearing on everyone's radars. This really ticks a lot of boxes for my strategy this year of kind of finding small to medium-sized profitable businesses that have potential to grow, right? My largest win from last year was Huntsman Corporation, and that was basically the same. And I haven't been as excited for a share since Huntsman as I am for AMKR. I think I'm getting in on an absolute steal. Yeah, like I say, trading on a 9 current PE. And although it's increasing its capex still because it's in that stage of its journey, this is kind of a mix of kind of that picks and shovels play, because it does, things like testing and packaging for semis, as well as actual, production as well. So, they're building a new factory in Thailand at the moment to give themselves some more geographic exposure, headquartered in the US as well. So they may well benefit from any kind of tension, shall we say, between, China primarily and the US. And indeed Taiwan as well. So this to me is a really promising share price for such a quality stock. And what happened on their earnings calls is basically my reasons for holding them smashed expectations. My own expectations, their expectations. Earnings are up way into double digits. They reckon their market's going to grow by 9% next year, and they reckon they're going to target sort of mid double digits. Margins are increasing, earnings are increasing, dividends increasing. It was really difficult not to like the update, honestly. And I was actually really pleased with myself because I averaged up immediately, and I felt like I moved quicker than the market did. So I threw a lot of money into its general direction, and think I picked up again some good shares. Even though I was averaging up at 23.40 after the results, I think 23.40 is an absolute great buy. So even though I had my average into the 22s, it's now back into the 23s after I significantly added to my stake here. This was about a 50% increase on my shares. So I now have 355 after buying. So just to give you some idea of what that looked like. So yeah, I really think it's going under the radar, and I will continue to buy AMKR probably under about 26, 27. I think there's plenty of upside here, even buying at that level. So yeah, watch this space basically. All right, next on to most of the grouping here. So effectively, I've been buying shares in these companies just because they hit trigger points that I believe they are worth buying at, basically. So TROW is a new position for me. I was in for 152 as an average. I was buying if it went under 145. Sure enough, it did. So I bought, and I now have an average in the 147s, very low, close to 146. I just feel really good. Basically, this is a solid company. It's been beaten up by wider sentiment. So I wanted to increase my stake in it. GENI is here, I have spoken about beforehand, but just to kind of remind everybody who might be a bit new, this was a speculative bet, and if I'm honest with you, I moved too quickly, and I'm sitting on quite a lot of red at the moment. I went on to their first investor day at the end of January, and I was really impressed with their investor day. I had been prepared to kind of like walk away with like a 25% loss, 30% loss even. But I was really impressed with their investor day. To me, it's a very clear path to profit. They also did a very good job of explaining, their existing European business and the fact that it's extremely profitable, how the US side of the business is going to get there, how they're basically going to be subsidizing the US side of the business with their European side. And it just all made a lot of sense to me. Yeah, it totally resonated. Again, this is a sector that I'm interested in rather than particularly knowledgeable about, but I think it has huge growth. And so I decided to, again, add some more here, basically, to take me up to 2,000 shares in total. My average is now in the 860s. So, I mean, I'm still pretty red on this when you think the current share price is like 550. But again, here, I think this is a long-term hold for me, and we'll just wait until sort of 2023 to 2025 when the overall company will start making money. So that's the good thing here. I guess before I move on to Evraz, Hollywood Bowl, I bought in 2 tranches, one at 231 and one at 238. Again, promising earnings for me. I think this is trading on a multiple somewhere between 15 and 16 of this year's earnings, assuming they can stay open for most of the year. Gamma, I continue to think is a steal, and I work in this industry, so I feel very confident about Gamma Communications. Games Workshop, likewise, I continue to average into. I'm down about 10% on it at the moment. I've got my average now into £87 with quite a large stake, so that feels, again, really good to be buying at this level. Microsoft and Amazon. I recognize, by the way, that Microsoft at 290 isn't really cheap. I bought it at 289, but I'm starting to build a stake. This I had a very small holding beforehand, so this more or less like more than doubled my stake, even just £100. But yeah, I think it's such a quality company that I wanted to add basically. Amazon, I think, does have more upside, but again, I think it's going to be influenced obviously by tech. Cerillion here, again, this is bang in my wheelhouse, as well as Creighton's as well. So both of these are good. And Kainos likewise, I previously sold out at 16 and basically said, it's a real quality company, but I'd like it closer to 15. I was buying both sides at 15. You can see here my average is 15.06. So I basically decided to have a more sizable stake. I had a very small stake before, but now and it's still quite a small stake, but again, that's very promising. So yeah, all of those things that basically hit trigger points. So I decided that I had to make a move. Everest is a little bit different. So I've done videos beforehand explaining why Everest was better than Rio. Part of the reason for that is because it was favorably benefiting from geopolitics. Now it's kind of flipped. On Monday, they are in the process of divesting their coal business. It's actually already happened, but basically if you buy shares now, then you no longer qualify for shares in the new coal company. So that was really the main reason for the drop on Monday. And for me personally, this is actually quite a lag on my portfolio at the moment because it basically pulled about 1.1k out of my Everest holding that I won't get back until early April. So I'm basically sitting on that at the moment as kind of a pending income, almost like how a dividend works when it goes ex-divi, right? But this was more significant. On top of that, Everest is heavily at risk from sanctions from an oligarch's perspective and the fact it owns steel mills in North America. And it's going to be a bit of a wild ride. So I decided that at 287, there was enough upside here for the remaining iron ore part of their business that even though buying these shares doesn't give me access to the coal share split, it was still worth doing anyway. Saying that, I've now got about 2% of my portfolio in Everest, and for me, I'm going to be capping my buying here. Like, this is a very real risk, even in the mining area, and even though I expect, this will be okay in the medium term, it's going to be a bit volatile. So, I've done 2 videos now on Everest, including one very recently this week, explaining sort of how to approach it. That's going to be my approach, basically. So hopefully at least that's giving you some understanding of that. Just to round this out, Vici and Google, I'm just averaging into very slowly. Typically, once I trade anything left over, they're in 2 different portfolios. I basically put into Vici and Google. I think both of them are fine prices at the moment, Google especially, but Vici likewise, at $28 or even under, I think has got plenty of upside. And I think they're doing earnings next week as well, so that'll be interesting to look at from that perspective. And last but not least, I decided to reopen MPW here. I did have this a while ago when I first got into investing, and I had a ton of REITs, but sold out. But now its FFO is something like 16, so pretty reasonable. It's got good geographic exposure, and I got in here at like 20.55, something like that. So again, that feels perfectly good in terms of the dollar re-entry point. So I've been kind of reassessing my thoughts around REITs, and I kind of just like them as a defensive play, basically. So my medium-term plan is to get my REITs to about 5% of my portfolio. No pressure to keep at that level, though. And again, it's really just to give me a bit of defensiveness in what's quite a choppy time, and also, to be fair, as a reflection of the fact that I've gradually been making my portfolio more risky in some areas like tech. So therefore, I feel like I should have a counterweight and move towards some more defensiveness as well, which I recognise in REITs, especially like this and O, and to some degree as well VG, which again, I think people like gambling and fun and that kind of stuff as well, so I sort of expect I group them together. So yeah, anyway, you can see a ton of buys this week. If anyone has any questions about anything I've walked through, or indeed the handful of companies I didn't walk through, then let me know. Otherwise, we're going to have a look at some sales now. All right, so a smaller list, and I appreciate I haven't highlighted the top 2, but I think I've spoken about the fact beforehand that I'm gradually selling down these positions. I still like both companies. I think they're still reasonable investments if you guys wanted to get in now. It's just, I'm up sort of between about 15 and 20% on them currently, and I want to rebalance my portfolio a little bit. So, and in fairness, take advantage of some opportunities. So I'm just going to leave it there and not discuss them further. EVR, though, I do want to discuss because I've been bullish about this in the past. I still am, basically. I think the new CEO, Amanda Blank's done a great job over the last 2 years or so. I was into free insurers. I'm no longer into EVR. And the reason for me holding EVR was because of its turnaround. I now consider that turnaround more or less complete. By selling now, I do do myself out of what's expected to be a solid enough special dividend, but at the same time, the whole market sort of expects that. So I'm not really sure how much upside there truly will be unless it's something really special. The reason for the special is because as part of that turnaround, they've sold off a lot of their underperforming businesses. The expectation has been set that a significant amount of that's going to be returned to the shareholders. So we'll see if this ends up being a short-term play, and I could have held on for another sort of 3 to 6 months and enjoyed that dividend. But honestly, I have no real regrets here. I was targeting sort of 440, so to sell out of my remaining stake of 436 feels perfectly fine. I think the company is more or less up to date with events now, and I had an opportunity to redeploy that money elsewhere. So for me, I'm in this company for the turnaround. Turnaround is complete. I'm okay selling out. Originally, I was going to keep about 400, which was about half my stake at its largest, and then reassess when those results were there. But again, I just felt like this is in my my portfolio, my ISA, with things like FEVR, and I just think there's a lot more upside there, and I just wanted to redeploy the capital as well. So a combination of those two things there. I decided to sell out at JP Morgan. I took a reasonable profit here, something like 10% as an average. I got about 8% on what I sold this week and then 11% on what I sold previously. So maybe more like 9 as an average. I was into JPM, Goldman Sachs and TROW equally, but I just felt like JPM is a clear outlier here in terms of its expensiveness. I get the fact it's well-rounded and everything else, right? And again, I don't begrudge anyone for still buying JPM right now, but TROW to me seems really good value, and Goldman Sachs at least seems fair value. So I decided to sort of focus on those. Again, I would consider getting back into JPM, and I still want to get back into Huntington Bank shares as well, HBAN, just to really round out my financials. But right now, I don't think that HBAN or JPM are particularly good value. I don't think they're bad value either. I just think there are other places to put your money in the current market. So that's what I'm doing basically in my decision there. Next up, I'm just going to round these out as sort of profit took to redeploy. So regarding Alpha Wave, this was never really a big commitment to me. I decided to profit take because they had a jump on a Intel deal, and because I wasn't really that big on the business, I just decided to exit with, again, like a 15% profit, to be fair. So that's absolutely fine. I'd previously had a look at increasing my stake here, but I just decided it wasn't for me. So I just cleaned up. Next up, we've got Broadcom. I only had 1 share, and I bought this when there was, the original tech bubble in January. I really wish I bought more because, again, I managed to sell out of this for like an 11% 1 month profit, so that feels good. With my focus on AMKR, I just, this is now a fairly big stock for me, AMKR, and I want to make it even bigger. So it just doesn't make sense for me to have Broadcom as well, unless it's like a real discount. But my focus on the semi play is going to be AMKR, so again, just didn't need the duplication. Restaurant Group I've spoken about beforehand, selling and buying. I think it's an okay semi-risky play at the moment. If you're interested in a consumer discretionary UK company, I think it could do worse. It's got some good brands under its name, and its last trading result was solid. But again, profit took here and it's okay. Macerich, similar. I've spoken about Macerich beforehand. I'm happily buying under 16 and even under 17, but I just felt like there was better places to put my money. In fairness, I think I sold this and put it into AMKR. So again, no regrets there. And WH Smith, I've traded quite well over the last year. And again, I had a very small stake left in WH Smith, so I didn't exactly get the best exit here, but it almost didn't matter. It's 1 share. So to me, anything under 16 for WH Smith is potentially a buy. So you can see it's more or less flat on when I would consider buying. Because I think in the medium term, you're looking at like a £19 share price here once COVID and everything else stabilizes. But it may well be a slightly rocky journey. So again, I decided to profit take the rest of that and not think about it too much. And yeah, I'm happy with these movements, honestly. And then last but not least here, these 4 positions, I basically sold out of everything in one go here. So you can see they're all on the lower end of this list. I opened small positions in them previously, primarily just because they might have been interesting to me. Hasbro especially, I know as a company, and my young daughter likes some things that they make, so I was like, okay, maybe they're of interest. But again, I just don't think it's a particularly great investment. A fine company, but not for me. And really similar with the other stuff as well. I couldn't get excited about them or really wanted to add, so I decided this week to tidy up a little bit and again redeploy a very small amount of money elsewhere. It was mainly for the tidy up. So a really active week, but actually I kind of felt like I remarked on this in a Discord toward the end of the week. This is the first week where I genuinely felt calm. I felt like I'd almost matured as an investor. for me, like I was seeing quite a lot of red, and I was like, well, this is great, right? I'm getting to buy these companies that I really believe in, that I've already done research on. I felt really great about AMKR. You know, I felt like I was quicker to move than the market was, so you know, I got rewarded for that at least a little bit. And again, I'm going to continue buying because I think it's really going under the radar at the moment. I can't believe how cheap it is in an expensive sector. You know, and even things like FEVR, again, I spoke more about them last week, but I think the earnings pullback was a bit overdone, even if it had run up a bit too high beforehand. So for me, I'm buying under £21, right? And I'm picking up these shares at like even some of them under 20 quid. So again, that just feels really good. Lots of safety margin there. And yeah, okay, I am also buying some riskier things like Genius and EVR at the moment is quite risky, and you know, maybe some tech stocks. But I feel absolutely fine, you know, picking up shares in like Google and TROW and you know, who else have we got there? Like you know, even a little bit in CRM, Salesforce. I felt really fine. It was weird. Like, I can't fully explain it. Like, I think psychology really matters. You know, if you're a new investor, especially if you've been in since only September or so, the market's been quite challenging. I'm up only about 0.5% since September, right? And in that time, I've had my best month ever, my worst month ever. Like, it's all over the place. And then if you look even more closely at the day levels, again, most of my best days and worst days have been in the last 6 weeks. So it's absolutely all over the place at the moment. And like, I think mental resilience starts to come into it. So when it got to like Wednesday and, you know, it started to turn red again, I really felt surprised with myself. And I felt like I reached a level where I was like, you know what, this is okay, right? Like, I'm not retiring for another 2 decades. Right now I'm picking up shares in things like Google and Microsoft that maybe it's not the biggest discount you've ever seen, but it still feels absolutely great for me to be picking it up, you know, 15% cheaper than it was quite recently. So I guess, yeah, it was kind of a good reflection for me. And I guess I'd just say to anyone else, like, if you're really struggling at the moment, like, I kind of get it, because it can be brutal when you see, you know, your money getting taken away, you know, and you feel like you've done everything right and it's just not rewarding you, right? It's like, why am I doing this? It can be quite brutal, and you know, the market can make you feel like a right idiot. You know, I've got a couple of very like 4-figure reds in things like Gamma that I still think is a great company, and Genius, which, yeah, I got in a bit too quickly, but I still think it's got lots of potential. And then likewise, it can make you feel brilliant. You know, I feel really good about National Express, about Huntsman Corporation. You know, these are shares that virtually nobody talks about at all, and I feel like I'm really understood them and moved faster than the market did. So, and likewise, hopefully AMKR as well. So, like, you have these highs and lows that are difficult to describe to anyone who's not an investor, and you know, I still experience them, but at the same time, you know, once you get over that initial visceral reaction, you step back and you just say, okay, is it really that bad? And it's like, well, no, you know, I still like these companies. These are actually now better buying opportunities for me. And for me, even though like you might look at this and see a lot of trading and be like, oh my god, like Liam's panicking, like I sort of, I wouldn't think that's fair, basically. Like, and I think I'm honest enough with myself to admit it if that was happening. Like, all of my buys here were basically things that I wanted to do, and so to have an opportunity to do them was great. So yeah, you know, I profit took. Maybe I'll regret doing some of those profit taking. Maybe I won't. We'll see. I don't tend to regret things too much. Like, I did things very deliberately this week. I probably will make some mistakes within my movements, but I felt pleased with myself for both kind of doing what I wanted to do, you know, and ultimately fairly relaxed and sanguine about the kind of turbulence at the moment. So I don't really know what happened to me this week. It was just a good positive reflection, and hopefully I'll continue to feel like that even if the market does continue to be red, you know, and we'll navigate it as best as we can. So that's just a reflection that I had, and kind of some what I hope will be helpful words for anyone who's feeling beaten up at the moment as well. So, like I say, I'm up 0.5% in the last 5 months or so. The last year to date, I'm down about 4%. I know some people will be doing better, some people will be doing worse, but you know, again, this is the market, right? And we need to try and take a long-term view to these kind of things. So, I think I'll leave it there, to be honest. I've said everything I wanted to say. Again, any questions, comments, etc. down below. Otherwise, I've been the Boss Hog. Thanks very much for watching, everyone, and good luck with your investing. Bye for now.